Now, the Naira settles at its highest level since March this year, breaking below 1,500 Naira to the dollar at the official market, with the parallel market also mirroring similar moves. Will the local currency sustain this uptrend? Chuka Nwachukwu, Chief Dealer and Head of Trading at UBA, joins me now for more market movement in the fixed income and FX market. Thanks a lot for joining us on the show today. Chuka, it's quite a different tilt from last week's conversation. We are seeing the Naira break below that 1.5 mark. A stronger Naira is what it's looking like at this moment, not stable. Let's talk about the movement here.
Yeah, so we've seen it move this week around 14.95, and then currently trading at 1,500, which is quite remarkable, like you rightly mentioned. So it shows that the stability for the past few months is obviously paying off, and now we're not talking about stability, we are talking about appreciation, further appreciation. Yeah. So for me, I think it all boils down to a couple of things. One is the CBN policy, of course, which the governor keeps talking about price stability, which obviously has resulted to single exchange rate. The second one is FPI activities. Between January to about July, we saw well over $6 billion, in terms of FPI investment, which obviously these inflows has actually helped to, to tamper the demand. And so, for me, I think price stability is very key. Yeah. And then also we can see that the foreign reserve has been stable. Yes. Yeah, around 41.
As of mid-August, $41 billion.
Absolutely, yeah.
So we had even passed the mark I had earlier predicted, because I was cautious if we're going to hit that mark.
Yeah, so these are the factors, that has helped Naira. And it's particularly good for the economy because for investors, gives the confidence that, look, the currency is stable. And then, of course, it will also help, in terms of, pull out when most of them want to exit the market.
And also, we are looking at the fact that we are having reduced speculative trading as well. Now, walk us through how this is also helping to bolster the movement.
Yeah, so that's also another policy, deliberate policy by the CBN. Speculation has been, cut drastically due to the single exchange rate, right? So when you had a huge difference between the parallel market and interbank market, that's when speculative demand, was really up. And now that, there's really not much difference. So, you're not speculating anything. The price at which you get at the interbank market, sometimes even parallel market is a bit lower. So it has helped, in terms of letting the public, know what the real actual demand is. So, for me, I think it's also a very good move. And if we continue this way in terms of keeping a single exchange rate, definitely, Naira will appreciate
I want to put you on the spot now. Give me a new range.
Well, I think between now and the end of the year, we'll probably see around 14.85 to between 14.85 to
14.90.
Yeah, absolutely.
Around that range. Okay, let's talk about how healthy we have liquidity at this moment and how this also serves as a backdrop for lower funding costs.
Yeah, so liquidity has been, very, very positive since last week. Monday, the system liquidity opened almost 2 trillion. As at this morning, is about 1.9 trillion positive, right? Yeah. So that actually has helped a lot. There were a couple of inflows this week, about 195 billion in terms of maturities, NTB maturity, and then of course coupon payment, and so that has added to the liquidity in the system, and that obviously has has affected trading on the fixed income side as well. We've seen bullish sentiment, especially on the longer end of NTB. Especially the September 3rd bill is actually investors' delight, and that coupled with the fact that we have excess liquidity in the system. So investors obviously will want to plug this some of this liquidity into the fixed income market, and that's why we've seen bullish sentiment both on the T-bill side and on the bond side as well.
And talking about sentiment at the moment now, and where we are seeing the biggest concentration of movements, we are seeing buy interest around the short to medium as well as the long end of the curves. Walk us through the yields movement within this realm.
So the interest majorly is on the mid-table bond, 2029, 31, and then 32. Some 33 as well as 34. However, this movement, or this sentiment has actually made some of these bonds, have their yields, significantly drop. We've seen the yield drop from 17 levels to about 16.5, on the especially on the 2033 and then 2029 as well. So we will continue to see this movement for two reasons. One, as long as the system is liquid, just as we've seen now, and so most investors will obviously want to, push some of this matured liquidity into reinvestment, and that's why, like I said earlier, we've seen.
And for the 2053, we're also seeing it settle around 15.9%.
Absolutely, yeah. But I mean, for now, there isn't much interest on the longer end, which is 45, 53 as well. Yeah.
But would you now say comfortably that we can lock in the sustained investors' interests near term? Would you say we have this locked in?
Yeah, I think that most investors have one eye on the speculation of a rate cut towards the end of the year, and so it only makes sense. Once there's a rate cut, obviously yields will significantly drop. So it only makes sense that you lock in some of this liquidity now, and so eventually, if there's a rate cut, you have already locked in at a very high yield, which makes a whole lot of sense. So for me, between now and November, December, we'll continue to see this yield, drops, slightly, but I don't see any major drop, except there's a rate cut. So if you see a major drop, if there's a rate cut, then we'll see major drop maybe around 13% and 14% for the mid-term bond.
Okay, we'll leave the conversation here for now, Chuka. Thanks a lot for your time. That was Chuka Nwachukwu, Chief Dealer, Head of Trading at UBA.